This is Silver Dave. Do you want to retire and protect yourself against inflation? What's better, gold or silver? Let's find out. Sometimes I think I don't know which one protects you get better against inflation. What the hell is inflation? Well, what is inflation? Let's say I have this fine bottle of wine here, and this bottle of wine costs around $25 in France. Okay, it's a decent bottle. It's not the real Mouton from the Famille Rothschild. This is one of their lesser quality wines. They make a lot of different wines. The highest quality one is the ones that sell for hundreds and hundreds and sometimes even thousands of dollars at auction. Um, this is not that one. This is the good quality, but much more lower common wine they have, table wine they have. It's still a good wine. It's around $22, which is roughly the same price as this 1 ounce of silver. But will I be able to still buy this bottle of wine and enjoy my drink when I retire if I invest my today's dollars into this piece of silver? Or maybe it's better for me to actually put it into this piece of gold, because I know that a few hundred years ago the wine was not $22, it was much cheaper. And if I kept it in dollars, I wouldn't be able to purchase this fine bottle of wine when I retire. So what should I do? Well, I decided to put some of my skills to the test, and I have the answer for you. Let's go to my computer. We are at my computer, and you have before me just a very, very simple program I wrote to look at historical silver prices. And what I have here is year segments and all these other calculations. But to explain a bit why I decided to look at this was I've been looking on YouTube, and I also received some advertisements from my gold and silver suppliers. And most of these advertisements claim that if you bought gold at a specific year, for example, 1970, you bought it and you held on to it until 2019, so last year, and you sold, and every single year you were putting in X amount of dollars, you would make, I don't know, the example they gave, I think, was you would make over 200 million, having put in more than $490,000 over that time period. And I was thinking, okay, that's not too bad. If you go back and look at it, if you're comparing it to inflation, it seems to be all right. But I did think that it was a bit of cherry picking, in that when you look at a lot of these information that these YouTube channels and the advertisements show you, they cherry pick specific years and specific ranges of dates that give you the best picture of how gold and silver perform over time. And what I wanted to do was to make a small, very, very simple program that would just look and tell you what percentage of year periods are there from the start of from 20 is when I took the date, from 1920 until today. How many periods, if you were looking at each month plus X amount of years, how many of those periods resulted in positive growth for silver or gold, and how much of that is actually beating inflation, and how much of that resulted in a net loss. So what I have here where we start is I have the year segment. You can change this. Every time you change it, it changes your result. So we'll just go over a little bit of how this thing is structured, and then I'll tell you the results. So I have the year segment. From it, I calculate the months. I output some information of how many years there are and how many months it is, how many months is equivalent to those years. I have a target inflation rate that I want to beat in this system. And I have here the historical inflation rate for the United States, which is 3.91. And I have the delta of the change of the based upon inflation for the historical US inflation rate, which is 3.91 since 1920, and the delta of the inflation rate based upon my target inflation rate. So for most of my experiment, I set the benchmark at around 3%. I'm going to lower this just in this scenario because the current benchmark is 2%. Let's see if historically we can beat 2%, 2% inflation. What I have here, you see this long column, is the historical prices of silver month per month, with the highest and lowest prices per month from 1920 all the way down to 2020 to today. I'm basically assuming that our buyer is relatively well informed, so they'll cost average, so they'll buy small amounts across a whole month, so that they're not caught out by the lows or highs within that single month, but they're buying the average price when all of their whole stock is taken together. So I'm doing by month the average price between the high and low, and I'm seeing what is that price, and that price, in this case, 360 months later, whether that is a net gain or a net loss. 360 months is essentially 30 years. So I'm looking at a very long buy period and how silver will perform, and whether it performs better than inflation, whether it performs worse than inflation, whether it performs really terribly and you lose all your money. So I'm gonna uncover this blurred area because I already ran the program, so I know the result. I can run it again, but I'll do that at the very end. We'll change the date. So for a 30-year period or 36 months, at a benchmark inflation rate, I have it on 3%. Let's run it on 2% then. On a benchmark rate of 2%, where historically the inflation rate was higher at 3.9%, we assume that the buyer is cost averaging over this 1 month period, so he's not caught out by high and lows. We have 1,270 months of data. The total price segments, when we divide this up into the 30-year tranches, we have 910 tranches of data. How many segments outperform inflation? 298 of these segments perform. So when you bought at a specific month that you held on for 30 years, 298 cases were above inflation. 323 cases were below inflation, right? Below the 3%. And the total loss, the years where we lost money, was 289 times. We had 289 cases where we lost money. So if we base upon the historical price for 30 years, there were 32% of these tranches which were losing buys. You just wouldn't make money during that 30-year period. There will be 33% where you're beating inflation, and 35% where you're not losing money, but you're not beating inflation, right? 67% of the time you're not breaking inflation. So it's not a great result. It's not a terrible result. It just means that in that 30 period, it's very unlikely that you're going to beat inflation. Most likely you're not going to beat inflation. So can I say that if you hold silver for 30 years, that you're protected from inflation? I would say somewhat, but you also run the possibility of 1/3 of the time actually losing money. So I don't know. I have to say I was a bit surprised when I ran the numbers. I was expecting actually more upside than what I saw on these on this. I was expecting that more of this will be classified into the zone of beating inflation. Not that actually it's quite well divided. That some of it is under inflation, some of it is over, and some of it is losing money. And that over 60% of the time you're under inflation, which means that overall, I believe that silver is not going to perform better than inflation on average over a 30 time period. Now, what if we decrease this? What if we decrease it to like a 5-year period? How badly will it do, or how good will it do? Well, if we look at a 5-year period, you tend to lose a lot of money. I would say, like, if you're holding silver for a very short term, less than 5 years, this case is 5. If I go down to 2, I did this, I think, before, it's horrible. This is why a lot of people are saying that silver is the investment that is painful and so on. Yes, if you don't hold on to it for long enough, you're going to lose money. Historically, that has been true. What if I increased it beyond 30 years? What if I increased it to like 40 years? You're looking at periods where the segment between when you buy and sell is greater than 40 years. I think you tend to make more money than you lose. In this case, you're seeing that, the lose money side, you're less than 16%. So what do I think about stacking silver? Well, at this point, I have to say I'm a little disappointed that it's not beating inflation more often, and that even if I increase the time period where there is more inflation going on, it's not giving you more upside, which isn't really that surprising. It's sticking just a little bit below inflation, but you're making money, but you're not making so much. But I'm not also at the historical inflation. I'm at the 2% inflation. If I increase this number changes. So we're not at 52% if I change it to 3.9. If I change it to 3.9, I think my numbers drastically change, and you don't beat historical inflation at all. You're at 7. So over 2/3 are not over 3.9. If I go up to say, like, does it perform better than real estate? Let's imagine it's not inflation we're trying to beat. We're trying to beat real estate. It never beats real estate, which is 7% historical benchmark. I think the S&P's 500 is 12%. So yeah, it's not going to beat it. There is no case where its upside is greater than other asset classes in this case. But if we put 3.91, it's still doing decent. There's no case where it's doing way more. It's doing like, you're looking at a very large increase. But okay, it's not terrible. It's not great. But here's what I think is going to happen. I think if you have like a 2% target inflation, and what really happens in life is that a lot of people think that they're stacking silver and they're thinking that they're going to make money. Eventually, you might make money. You will make money. You will be roughly around inflation if inflation is not more than 2%. You will make money more likely if you hold on to your silver for longer. So if we hold it for 50 years, we see that the probability of losing, like the losing segments, falls down to 9%, right? And I think what really happens with silver in this case, you see on television somebody inherits like a silver chest from their grandparents. And when you're stacking silver, I have to say you're not stacking for yourself. You're actually stacking for your kids. Because I put 30 in the beginning is because most people, when they come into their careers and have a little bit of disposable income to invest, it's usually around their 30s. And you're not going to stack 50 more years of silver. It's kind of like, I think I heard Warren Buffett say in a video, if you're waiting like 40 years to do what you want to do, then it's kind of like saving sex until you retire. It's not it's not the same. In this case, if you're going for a 50-year stack and hoping that in 50 years you're going to sell your silver, most likely in 50 years you're going to sell your silver and you're going to make some money on it. As you can see here, are we beating a 2% inflation? Yeah, probably 35% of our investments are during that period are beating the 2% inflation. 56 are less than the 2% inflation. It's not terrible. It's not great. You will have savings to the side. But what most likely happens, and this is what we see more or less in real life, is that people come into it a silver or gold inheritance, and they are super happy because suddenly that inheritance is worth a lot more than whatever initial price gold and silver was worth 50, 80 years ago, which is true. If you put in here, you came like your great-grandfather, your grandfather stacked silver for 60 years and he dies, and then you inherit that silver, you're going to make it's going to be worth more. It's going to be worth, you will not lose money. It will be worth more for sure. It's if you look at the historical cases, it's there. There are almost no segments. There's 2 segments which are losses, but most of it is underperform inflation or outperform 2% inflation. There are a little bit less than I'm looking at 555 segments because 60 years is quite a long time. So this would only go up to 90-40, and then the last tranche would be like, okay, that's it. But yeah, so I'm saying that if somebody says that cherry picks a silver price and then tells you that it will always outperform inflation, or it will keep its value over a long time, it will keep its numerical sum value for sure. It will, after 50, 60 years, it will keep, it will probably beat inflation. Some of it, depending on when they bought it, there's a possibility that it beats inflation. There's also a possibility that it doesn't beat inflation. If they bought it for less and you're stacking right now and you think in 5 years you're going to sell your silver and you'll make $40 per ounce, I've got a disappointing story for you. That's very unlikely to happen. That is unlikely to happen. I'll tell you a little bit why I think people are trying to hype up silver, and and some of the reasoning behind why they do it. What about gold? So this is the other material that we can compare to. Does gold perform better than silver against inflation? And when I did my analysis, I was actually a little bit surprised. So we started off here at 30 years was a 2% inflation, and we got 32% of the time, 32% of the investments were losses held over a 30-year period. And if we do it for gold at a 30-year period and we run this same thing, we actually have 18%. Now that's interesting. That is very interesting, because all of a sudden you see that while gold might make less money, right? Gold, not less money, but gold, it doesn't seem to have chances where it is performing better than inflation. It's comparable, 29% is performing better than inflation. You also have less risk. There's a lot less risk. 52% of the chance it's actually making money, but less than inflation. And 18% of the time you're actually not losing money. So that is very, very interesting. Now, wait, I'm doing a 3%. So it should be even better if I do it at a 2%. And okay, so different numbers. If we're comparing to a 2% inflation rate, then actually gold on the same measurement performs better than silver. Yeah. So is gold better? Objectively, yes, gold is better. Gold is, you will tend to lose less money. You will tend to beat inflation more frequently. And you will tend to preserve your purchasing power better. Is there a reason for that? I have some theories. I don't know. I'm looking at this data and I'm thinking that there's more. There's a lot of data here. And the only thing I did, I'll put the link to the 2 calculations here and how I'm classifying it, so you can look through it and you can decide if you want to make changes and play around with the numbers. The main number you can play around with that everybody can try is here, the year segment, to see how long you hold on to it and how it changes the probabilities. Gold tends to reach this ability of giving back your returns much faster than silver. And if you look at 50 years, yeah, gold is performing very well compared to a 2% inflation rate. If we're comparing to 60 years, you're actually going to, I believe you're going to crush it. You really are going to crush it. It tends to be 50-50, so I would say gold is more of an inflation hedge than silver. So why is that? Why is gold a better inflation hedge than silver? So this is the theory part. that comes in. I think silver is mainly an industrial metal, and it is very different from gold. Silver suffers slightly from being an industrial metal and not a pure currency. You're like, gold has no uses. Yes, but listen to the end. Silver, being a pure industrial metal, also suffers from deflation. And you're like, what deflation? We're printing money. I'm telling you, if you're an industrial metal, it doesn't matter that people are printing money. What matters is technological innovations reduce the quantity required to produce something, right? It's optimization. If you think about it, steel, right? Coal was a highly sought after commodity during the early ages of steel production because coal, you need a large amount of coal to produce steel to make all your industrial goods. But over time, we've refined how much coal we need for steel. Coal is relatively cheap. And if we look at all industrial materials and metals, there's a constant race to improve and reduce the quantity required for the same number of output. And this is also true for petrol. This is also true for nuclear reactors. This is also true for compute power, for computers. If you look at how much computers cost back in the 80s and how much it costs now. And I think on the forum, someone was asking me, telling me like, oh, 3D printer is super expensive. I was like, yeah, that was 5 years ago. Today, if you look at how much a 3D printer costs, I was looking at SLA printers. I was surprised because I bought my FDM printer, I think, 4 years ago, and I paid $200 for it, $220, and then there were some shipping costs. And I thought it was a great deal. Now FDM printers of the same type are less than $150. And if I go and look at SLA printers, I think the first SLA printers that came out were close to $5,000. So they're the type of printers that use like a UV screen and they shoot like light onto the resin and they build basically your shape by solidifying the resin onto a base plate. And it pulls it out of the liquid. It's pretty cool. That technology, when it first came out, it cost, I think, $20,000 or something. It was like for your home machine, for your home printer. Now I saw one that was a smaller version. It was less resolution. It was about as good as the original ones. It cost, I think, $160. 160 Swiss francs, so $180. That's ridiculous. That's orders of magnitude cheaper because we're able to optimize. Because it's an industrial product, silver suffers from the same consequence. Is that right now we are expanding our electronics in the world. We are expanding our number of networks, the number of servers, the number of computers, cell phone towers. It's increasing silver demand, which will mean that silver price will go up. But as an industrial manufacturer, your objective is to make profit. So you have an incentive, you have a 100% incentive to reduce your silver consumption. The first step most likely will happen is we'll find optimized processes to improve silver paste and silver brazing solutions and all these things to reduce the quantity of silver. Because right now what I'm seeing is originally, I think a few years, I was doing some soldering and I was looking for a different type of electrical pastes. And I was finding that most of the solutions, the high quality ones, they were like 90% silver, 80% silver. And then now they're dropping the silver content. And you're looking at they're using other materials and compounds to replace some of the silver. So silver demand is actually going to go down as price goes up, which means that will put downward pressure on the prices of silver. Why is gold a better inflation hedge? Well, I think gold is a pure currency. That's why it's not suffering from any type of industrial sort of deflationary push on its price. There's also another factor, I think, is that gold, its main consumption is either as bullion or investment material or in luxury products. And luxury products tend to have the opposite effect in that luxury products over time, if they get more expensive, their demand tends to go up. For a lot of luxury products, as they get more expensive, their demand doesn't change. Their demand is very inflexible. And the same 5 guys who are buying Ferraris will still buy Ferraris if they were like $2 million more. That's the reality of things. The demand is inflexible, so you can increase your price with inflation, and you can follow it to inflation. And so, if there is more demand for gold for luxury products, I think the price of gold will just go up. It's just going to follow inflation, keep going up, keep going up, keep going up. They won't necessarily even have an incentive to try and optimize it and reduce gold price, because they can just add extra margin on top of it because the demand is inflexible. Um, that's my analysis. I don't know what you think. Maybe you have some other opinions and how you see things. Please feel free to comment. I'm gonna put this out, the calculation and the price data, so anybody can play with it. I believe that information should be shared, and I come from a sort of open source community, so I believe that if it's information, it should be shared, and everybody will benefit if we all look at this information and we try to make sense out of it. And I think overall, from just the basic analysis I've done, I was a little bit I like silver. I think it potential has more potential, but I think if you are trying to stack, it might be a good idea to actually balance out a lot of your silver purchases with more gold. How much gold should you buy relative to silver? I think silver should be, I think it depends on the gold silver ratio, first of all. There are times when silver is so cheap that it doesn't make sense. I would buy silver then. At this moment, if silver goes at the current gold silver ratio, and silver goes up to $30+, I would be careful. That's my thing. I would be careful to keep piling into silver at prices above $30. If there are dips, if there are corrections, that means that corrects more from 30 to like $20, or from 30 to sub $20. That might be a buying opportunity if you can find silver physical silver at under $27, $26. That might be a buying opportunity for your physical stack in the long term. But I think for if you want to like have more financial responsibility, it might actually be a good idea to stack a lot more gold than silver, and to put a bit more of your currency into gold, and then rather than silver. And if silver becomes super cheap, you can actually just take your gold and ask if you can do a straight up gold silver trade. If silver goes to a ratio of 100, like we saw it before, it went to it was so cheap, it was like 100 to 1, and you just go and ask if people are willing to trade you at 101. And if they are, you got a lot of silver, comes back, take your silver, trade it back to gold. That's how you can sort of how you can take your currency out of fiat and then still make long-term savings. Because eventually, you do know that if you are seriously considering to stack for retirement and to have a bit of physical currency for retirement that's not tied to any government, you do have to do a little bit of research and think, what are you going to do? I think my position is I'm going to buy a lot more gold than silver, because I've looked at this. I'm like, this is worth investigating. I'm going to investigate. I'm going to take a little bit more look at the current price of gold and the current production of gold and the current supply of gold, to decide on how much I want to buy and how much of my annual income I'm going to allocate to gold. But I think from this point on, most likely, based upon looking at the historical data and looking at the current premiums and also the tax regime on between gold and silver, because every time I buy silver, I have to pay 7% income tax, with 7% of value-added tax, which it kind of like makes me not so happy. But for gold, I don't have that, and that is one option I think that gives gold also an edge compared to silver, is that many countries exclude gold from value-added tax, which is another factor which gives gold a slight edge. Do I ever think that because of industrial use, silver will never go to zero? That's not true. Platinum has tanked. We've seen platinum used to be twice as much. Once the industrial side moves away from a specific metal, and that metal is mainly for industrial use, which is the case of silver, it's very minorly used as bullion and as a currency. Um, the metal just craters, like what happened to platinum. Can platinum ever come back? It's hard to say, because platinum's, if you look at how the platinum use chain, it's mainly used as catalyst and for synthesis of certain petrochemical goods. I was thinking of buying some platinum. I'm a bit on the fence about it, because I'm thinking, okay, what are the next technologies that will happen? Mainly it will happen in the field of electronics, so which is silver is involved in. It will happen in the field of space travel. I don't think platinum is used in space travel. I don't think silver is used in space travel. I actually don't know very much about space travel, what metals are used in it, so that you have to look that up too. What else? I think maybe there's a potential for a resurgence of nuclear power plants. And I do know silver is used in nuclear. I don't know if platinum is used in nuclear. It's possible that it is also one of the metals used in nuclear. The question is how much of it will be used in nuclear. You know, if they only need to make one component, and that component is supposed to last 300 years and is made out of platinum, it's not going to increase demand. It's not going to be great for industrial use. Yeah, feel free. Yeah, that's my analysis. Thank you for watching and listening to me rant for this long. It went on a little bit longer than I expected. Feel free to play with the code and this thing. The information, the output is just in the console. I haven't gone too deep into it. I was thinking of building maybe some graphs and then normalizing your losses and everything, but then I was like, I'm running a bit out of time for today to make everything I want to make, and then also do my chores for the weekend. So thank you for watching. Like if you like the content, and feel free to comment and subscribe. It's been great to see that I'm getting more people commenting and more people subscribing. So that's very I'm going to try and make more content. I usually will post one video a day. Sometimes it might be a pre-recorded video. I can't guarantee I always have time to make some of the longer, more detailed content. But whatever, just write what you want to see more, what you're interested in, and I'll be sure to see if I can make it happen. If it's not soon, I will try and make it happen when I have more time. That's it. Thank you for watching. This is Dave.